Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is August 31st, 2025. I am Luna.
I am JPMorgan. U.S. stocks came off those record highs.
Yeah, the S&P 500, the Dow, Nasdaq, all down a bit. S&P fell about, 0.6%? Nasdaq more like 1.2%.
And tech seemed to lead the way down. I saw Dell and Marvell had some weak forecasts.
Exactly. Those forecasts definitely weighed on them. Although Autodesk was a counterpoint, it jumped on a better outlook.
So why the caution? Just pre-long weekend jitters or?
Partly that, yeah. Cautious positioning, but also some mixed signals, like that July core PCE inflation number.
Right. The Fed's preferred measure. Still hot. Well, it clocked in at 2.9%. Still above the Fed's 2% target, So it adds a little complexity. But what's interesting is, despite that inflation reading and the market cooling off, the expectation for a Fed rate cut, it seems to be mostly sticking around.
Assuming inflation behaves, I guess.
Right, conditional on inflation stabilizing.
Yeah.
And you saw that caution reflected in bonds, too. A classic safe haven move.
So Treasury prices up a bit.
Modestly, yeah. The 10-year yield ended up hovering around 4.23%. And the U.S. dollar also got a bit of a bid.
The DXY index.
Yeah, ticked up to about 97.9. Just reflects that slightly lower risk appetite globally. Even saw the yen and Swiss franc firm up, the usual suspects.
Now, commodities, kind of a mixed picture there.
Very mixed.
Yeah.
Oil prices slipped down nearly 1%. Oversupply worries are definitely swirling. Rosneft even warned about a potential big surplus in Q4.
Oof. But gold went the other way.
It did. Rallied pretty strongly, actually, about 1.2% to a multi-month high. Clear sign investors were looking for safety amid all the uncertainty.
Okay, here's the weird one, though. Copper. It jumped. Like almost 3%. That seems to go against the grain.
It really does.
Yeah.
That copper surge is quite telling. It's not just noise. It suggests something else is going on beneath the surface.
Like what? Specific supply issues, maybe?
Could be supply constraints, or maybe some really targeted bets on future industrial activity despite the weak China data we saw. It's definitely a divergence to watch. And speaking of China, that official August manufacturing PMI, still in contraction territory, right?
Yeah, 49.4. That makes it 5 months straight below 50, which signals shrinking activity. Missed expectations slightly, too.
Exactly. So this just reinforces the idea that Beijing might need to step in with more stimulus. But for now, it's causing a bit of a risk-off ripple, hurting commodity exporters and anyone relying on Chinese orders.
Okay, shifting gears a bit. Some other big macro things happened. There was that U.S. court ruling on the Trump tariffs.
Right. A U.S. appeals court basically said most of those tariffs were unlawfully put in place. Big deal, potentially.
But it's on hold for now.
Yeah, the decision has stayed until mid-October, gives time for a Supreme Court appeal. If it's ultimately upheld, though, it could mean lower import costs, maybe help ease inflation long-term. But for now, yeah, it's a wait and see. Adds uncertainty.
And more tech friction with China, too. The U.S. tightened chip export rules again.
They did. Revoked special waivers for Samsung and SK Hynix. Essentially blocks them from expanding or upgrading their plants in China.
So that hits U.S. companies that make the chip equipment.
Directly impacts them, yes.
Yeah.
And just injects more uncertainty into that whole global tech supply chain. It's getting complicated.
And on the geopolitical front, we got confirmation about the death of Hamas's military chief in Gaza, Mohammed Sinwar.
Yeah, that news came through. While it doesn't, directly move financial markets day to day, it's a reminder of the ongoing instability in the Middle East.
Which usually supports things like oil prices, gold.
Exactly. Supports oil and safe haven assets like gold and the U.S. dollar. It's part of the background noise that investors have to consider. So looking ahead, what should you really be watching? Top of the list has to be the U.S. August jobs report. That's out Friday, September 5th.
The big one. What are economists expecting?
Forecasts are around plus 78,000 non-farm jobs added, and unemployment may be ticking up to 4.2%. This is really a potential make-or-break number for market sentiment right now.
How so?
Well, a big positive surprise. Lots of jobs added. That could weaken the argument for a Fed rate cut pretty quickly. But a weaker report, that would definitely boost those rate cut hopes.
Got it. What else? Treasury auctions.
Yes, keep an eye on those. The Treasury needs to borrow a lot, projecting about $1 trillion in net new debt just for Q3. If demand at these auctions is weak, it could push interest rates higher.
Which wouldn't be great for stocks.
Potentially not, no. And finally, watch for those global flash PMIs coming out in early September. They give us a really timely snapshot of economic momentum around the world. U.S., Europe, helps gauge if things are picking up or slowing further.
So putting it all together, it's definitely a complex picture. You've got cautious U.S. markets, China's slowdown, these ongoing geopolitical things, lots of moving parts.
Absolutely.
But I guess the core question for you, the listener, really boils down to this, doesn't it? How are that upcoming U.S. jobs report and those huge Treasury auctions going to shape what the market really believes about future Fed rate cuts?
That's the key. That conviction, or lack thereof, is what we'll all be watching very closely to see where things head next.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.